Well, welcome, my friends, to the stock investment portfolio assignment. We're going to build our financial acumen and hopefully start building portfolios in your career as well as your life that you can invest in. As we've gone over in class or on my online lecture video, how stocks work and their role in the economy. They're vital in the United States economy, and they're a form of equity financing. So when you buy stock, you are buying ownership into a corporation. So corporations, how they benefit, they can raise capital, fund future research and development, expansion and acquisitions. And again, from your perspective, it's an opportunity to let that company grow and eventually share in their profits. So you're an owner, all right? The company is now giving some of its ownership away, and you're buying that. And as an owner, you get to vote and influence on decisions, depending on how many shares of stock you have. It's liquid. It's a liquid investment, which means you can buy and sell stocks pretty much any time. Definitely get your money out within 24 hours, sometimes faster. And again, for the company, it's very easy to attract lots of investment. Creates jobs, of course. Corporations create a lot of jobs, boost our gross domestic product, and you are participating in either national or international growth. So a lot of great opportunities on each side. So how are they completed a stock transaction? There's a primary and a secondary market. A primary market, company issues new shares to raise funds. You have possibly and hopefully heard of an IPO, initial public offering. That's the first primary market. The second primary market is at the market offering. That's when the company has already gone through its first round of financing in several years. More than likely, a few years later, it needs to get more financing. Every share sold in a primary market goes right back to the company. Well, I want to buy Apple stock. I want to buy Nvidia. I want to buy some different type of stocks. They've already had their initial public offering and their at market offerings. How do I buy them? Secondary market. This is when investors are trading amongst each other existing shares. So large investment companies buy lots of different stocks and they resell them. On your Robinhood account, your Fidelity account, your Yahoo Finance, Google Finance, and you have an account made and you're buying shares of Apple or Nvidia or Meta or Alphabet, are in the secondary market. And again, we have all sorts of stock exchanges to let these transactions happen. So again, primary market is the first or second offering, and the money goes directly back to the company and is used for, again, we want to expand, we want to have more research and development, more capital. Sometimes we got to pay our debts off. We're using money for capital expansion, and the secondary markets basically are happening, or not basically, exactly, are happening after the initial issuance. You are buying and selling among traders. The company does not receive those funds. They've already received them. Someone's just reselling them. So, steps to buy a stock. You're excited, and this assignment will hopefully be exciting for you. You need to open up a brokerage account, right? Before you buy a stock, just like downloading an app or software. You research, once you have your account, you verify your identification and you get your bank account tied into that so you can deposit funds into it. You research the stock, make sure you have the tickers there. You choose your order type. Most of it's going to be a quick market order. We review, and confirm that trade, and then it's our investment, and we either sell it or we buy it more and we keep it and hold. That's what we do. So the orders that we mainly use in a stock trade is the market order. That means I found a stock I like, I'm buying it today, and I'm holding it. If I want to sell it tomorrow, I'm free to do that. It get a little more sophisticated with limit orders and stop orders. That means a limit order, you are purchasing or selling at a direct price, so you can control a little bit of that. Or you can have a stop order. Stop when it gets to this price, I'm not going to purchase anymore. Or if it starts losing money, so to speak, or the price starts going down, you can do a stop loss order to make sure it doesn't go any further. However, today, with today's technology, when you can see it 24/7, the market orders are just as fast as either are. All right, what about some apps? How can I do it? I hope you have a Robinhood account. So easy to make. Ameritrade. I love Acorns as well. E-Trade, Yahoo Finance. There's so many great ways that you can have Wall Street in your pocket. And you're in my class. I hope you're of age to do it. I think you have to be at least 18. If not, then you got to use your parents' account and start getting into this arena. You will really get your financial acumen going. You're going to understand what you do not already know, which is the key to wisdom. Let's just say this stock right here. It's called Rigetti. They're an emerging technology. I make sure you always have, and you can Google and AI this, but double check you have the right ticker. So that is Rigetti's ticker. When you put that into Robinhood, it will give you a review of what the company is, profile. Hopefully you're researching the industry it's in. You select, I want to buy 10 shares. They're at, let's say, $15 a piece. So it's $150 approximately. You confirm your order, and you've got now those 10 shares in your portfolio. You can sell more of those in the next day. I didn't like it. Or you can keep buying using a variety of ways, like dollar cost averaging. Every week I'm putting $100 into the stocks that I like. Great way to do it. You build it very logically, and you just let that ride. Fun stuff. So, quick learning right there. Stocks are the backbone of the United States economy. Corporations are. You're gaining ownership. When you bought those 10 shares of Rigetti stock, you are now a very small owner, but you're a part owner of that organization. Most trades will always happen in the secondary market. It means these are purchases that's already been made, and you are going between seller to buy them. You don't have to worry about it because the app, the company, the brokerage company you're with, they're taking care of all of that. So it's just more of what happens when. If it's an initial IPO, and all that money goes right back to the company. It's all good. I hope this helps understand the process. Start investing wisely in a quick way. Now we're going to look at the directions to do our stock project. So here is our assignment for the stock portfolio. Research 6 companies from different sectors: technology, healthcare, consumables, etc., etc. We're going to learn how to interpret stock market metrics, and we're going to create a $1,000 portfolio using 4 of the stocks that we have researched. And then we're going to reflect on our decisions. So step 1, find 6 stocks. All right. And for each stock, you're going to find the current information. Now, I already have the PDF template that you put this information in. So I will show you that. So we're looking at the company ticker symbol, the name, the sector, the industry, the current price, EPS, which we've gone over in the video or the lecture, earnings per share, price earning ratio, 52-week high-low, year-over-year growth rate, and market capitalization. For example, it's going to look similar to this. Apple, the ticker is AAPL. The sector is technology. You could go technology, consumable technology, it's a lot of stuff. When I researched this, the price was $190 a share. Good. Probably could be higher any given day. The EPS, which means the earnings per share, that's their income, their net income divided by all of the stock out there. Each share of stock earned $6.46. So, since that's a positive number, we know Apple is a profitable company. Could you have a negative EPS? Absolutely. That means the company is losing money. That's okay, because it could be an emerging technology that it's not going to make money for quite some time, and it's going to make a ton of money. Price earning ratio, PE. What that means, as I've gone over, is you are willing to pay basically $30 for every $1 Apple makes. That's a high valuation. It's not terribly high, but it is a valuation in the tech center that's anywhere between $15 and $40 price earning ratio. Again, that's the amount of money you're going to pay for every $1 that company earns you. All right, 52-week high was $199, so And Apple is an interesting stock, so it's going to be anywhere from $100 to $200, $250 possibly. Once it gets higher than $250, the company tends to do something else. They split their stock to make it back to about 100. We don't have to worry about that right now. 52-week low. Oh, wouldn't you like to have bought at 134? Yes, year-over-year growth. Now, this is just saying how you value the company. It's a 2% every year, but it is a huge company. It's a $3 trillion capitalized company. Was the highest of all time for a while. I believe there's a few others that have now surpassed it as far as all the stock out there. It's worth $3 trillion, and that's huge. That is absolutely huge. All right, that's what we're looking for. So you find 6 stocks, hopefully from different sectors, that you would think you could put into a stock portfolio, and I hope you do. This is not just an assignment, but I hope it gets you going into the investment world. So on the year-over-year growth, you may have to do a little bit of hunting to find this. It's very easy to find. So for Apple, we looked at their 2023 revenue and their 2024. So we subtracted the 2024 minus the 2023 revenue, and then you divide it right back by the 2023. You're trying to find a percentage of growth, and then you multiply it by 100. It just gives you the percentage. So in 2024, they had $391 billion and some change. I'll just take the change. And in 2023, they had $383 billion. So the calculation for year-over-year growth, we take the 391 minus the 383, divide it right back by that 383. So we have $7.75 billion. That was the change. And that gives us, divided by their 2023 revenue, then a 2.02%. So Apple's year-over-year revenue growth is 2%. This is a big company right in here. And they grow moderately because they have hit so many markets. Again, they are well over just about $1 trillion in sales. So have they reached maturity? Until they create newer products, then they could grow even faster. Still, it's a very stable stock, and we know that they're a very innovative company. You may want one of those shares, or 1,000 shares, in your portfolio. So, step 2 here. Now you've found your 6 stocks. You're going to narrow them down to 4. You have $1,000, and now you're going to budget which ones you want to invest in, and that will be the total of your portfolio. Pure example right in here. I put in Apple, right, tech, Coke, consumer, Exxon, energy, Disney, entertainment, lots of different things here. These are their prices as we create this. These change every day. Always look for the stock price in either a Robinhood account or your Yahoo Finance. If you rely completely on an AI system, it will, I can assure you, give you the wrong price every time, because it's getting the fastest price it found, and that may have been an older price. All right, you're putting 300 here, 250 here, 250 here, 200 here. That's $1,000, and these are the shares you get. These are some big stocks right in here, so you don't get as much as you think you might. But 1.5 shares here, 3.97, 2.36. There we go. There's our total value, and that is your stock portfolio. Pick any 4 stocks that you want, my friends, and they can be a lot lower price than that. This gives you more shares. So we have 4 reflection questions that you're going to look at. What do the analysts say? I'll show you how to find out. Do they say buy, hold, or sell? How diverse is your portfolio? If I picked 4 emerging stocks, well, it's not very diverse at all. And so it could take a long time for those to pay out. If that's your play, fine. Just defend that. Profitability. So based on the earnings per share, again, if it's a positive number, you know it's going to be a profitable company. If it's a negative number, it's losing money. Look at these. Are they profitable? What do you think about the valuation that you're having right in there? And again, at the very end, I want to keep this. I think I'm going to keep this for a while. I'm going to keep it. Once it goes up 10%, I'm selling. Tell me what you're going to do with it. All right. This was a great assignment right in here. Again, 70% of Americans, no idea how to buy stock. No idea how to do any of this. So now you can learn real data fast. Now we have a little understanding of what that price earnings ratio is, what the earnings per share means. It's how much a company earns per share of stock that they have outstanding. We have the practice of portfolio diversification, and of course, critical steps for an out of our PowerPoint here. We're going to look at an example. So let me just grab you up front, and then I'm going to grab you. So this is the PDF template that you downloaded. There it is. I have it all for you. So I'm going to take the stock Rigetti. Rigetti is a quantum computing company. And so I'm going to look at that. I think it's an emerging technology that's going to drive AI infrastructure. Since it's emerging tech, it is going to be a while. This will not be profitable very soon. I'm hoping it will be profitable 10 years out, and I hope it will be very profitable. So that is their ticker symbol. Make sure you get the right symbol, because I'm going to check. All right, they're emerging tech. Their current stock price, if I look for it today, and here it is, right about $15. And this is Robinhood account, and these are your Yahoo Finance. You can use Google Finance, Fidelity, whatever your accounts are in, or just want to research. So, earnings per share. All right, earnings per share, I'm going to find in my statistics, which let's look right in here. So my basic earnings per share is minus 0.87. You can find this in different areas, but Google Finance, under financials, so you're going to look at all the things, doing some research on these stocks you're going to buy, is negative 87. There's something called diluted EPS, which you do not need, but that's if they converted every single share of stock. But it's like the worst case scenario. So CEO has stock options. There may be some convertible bonds out there. If they converted everything, that's still it. So it's almost the same. So we're losing money. That's all right. I understand that. So the price earnings ratio, now I'm going back to my Robinhood account, so you can find information in different areas. Right now it's minus 21.31. That doesn't mean anything, but we know it's losing money. And since it's emerging tech, I'm okay with that. If this were a ginormous company that's been around forever, I mean, if this was Sears, which is dead, by the way, then you'd say, man, I got to get out. But if you think this could be something huge, like a next Nvidia, you're going to stay with it. All right. Earnings are 52-week high, 52-week low. There we go, 52-week low, 52-week high right there. You'll find those in a multitude. But I think Robinhood, as well as Google, Yahoo Finance, and Google Finance, get you so much great information. There we go. I did the year-over-year growth. Now I did come back right here to the financials on Yahoo Finance. There was, these are in millions, so there was their growth from 2023 to 2024. So I had a bigger number in 2023, and $12 million worth of growth, and then we only had about 11 million in 2024. So actually we have a negative year-over-year growth. So not great news for an investor. We like to see at least some positive growth year-over-year, but that's what we're going to stick with. That's what I'm going to stick with, and hope it gets better. Their market capitalization, again, my friends, if I'm going to write in here, I will find my market capitalization right here in the statistic, almost $5 billion. Small company, emerging tech, they do have a lot of cash, so they can burn the cash that they're burning. Again, I looked at much more research than just, I'm just going over the highlights here. Do the due diligence. And now I could put this into ChatGPT or Claude and say, hey, Claude, what do you think of Rigetti as a quantum computing stock for a 10-year hold? Give me some really good information. There we are. All right, so I'll fill up my 6. I'm going to take my 4, fill those up. That's how we do this. And then here are the questions. You simply type right in here your answers. Again, my friends, this is for you. So you can come back and say, you know what, I think I have a much more educated guess than someone says, hey, buy a few shares of Apple. Well, that's great. It's a very stable company, but I'm going to do a different type of portfolio. So I'm excited for you. I hope you'll enjoy this project, and I really hope you'll start dipping your toes into the investment world. Now let's see how we submit it. So here we are back at the original assignment on our Canvas page. You have the instructions. As you've astutely done, you have watched the video first. You have looked at the instructions. There is your template that you simply pull down. Let's see what it does there. All right, great. And that is how you download it, save it to your computer. I would always have your name like I'm going to show you. And now we are going to start the assignment right in here. So I've hit the start drive button already. File upload. You can either find your file, or I'm finding mine right in here. Randy Stock Investment Portfolio. And then I'm going to submit the assignment, and then I'll have all the little things say, yay, I've done it. And then it will let me know that if I've got the wrong assignment in there, I can always go back, as in every project, and resubmit that. I'm going to cancel out, because if I submit right now, it won't let me do anything later to edit this, because it'll think that a student has already submitted it. But I think you get the instructions right in there. I know you got this. This is something that we've been doing through this class. You are going to be, by completing these projects, my friends, certainly in the investment, you're going to be in the top 10% of the American population in your financial acumen. And I'm so happy I was able to help you be a part of that. Find some great stocks.